reach all part of the brain. So we scan it and we plan it and the brain get trained. The music take us up to a higher plane. It will heal the poor and it will vanquish the vain. Take a man from low and put him in a high plane. Take a man who is slow and put him in a fast train. If the earth is dry, Jah will heal it with rain. If the earth is cold, then a warm sun ray.
Hey everybody, this is Aphria from MyChartCoach.com, and in this video we're going to take a look at the marijuana sector. So yeah, today there was a big drop. We had, this is the marijuana index. You can see here that the North American index was down sharply. It closed down nearly 8% today. It's starting to pull back here after a big run. So you have a little correction going on right now. The United States is down as well. The United States index, that was down nearly 6% today. You can see the daily move just in a straight line down, and then we have the Canadian index. This is the 1 month chart. You can see it's topping out here, or at least having a temporary pullback, and you can see it's pretty sharp. It got moving pretty steady today into the close, and so yeah, there's a couple of things going on right now. First off, the Canadian post-work stoppage, Canopy Growth had some words to say about that, and so that seemed like that was putting some pressure on the sector today during the intraday hours. And then after hours, there was word came out that the U.S. could ban Canadian workers, and so yeah, that put pressure on Tilray, Chronos Group, and Canopy Growth, and so yeah, so all three of them were under pressure. And then today, the marijuana alternative harvest ETF, ticker symbol MJ, it did have a big pullback today. As you can see here, check out the red candle. So that was a solid red candle after multiple white candles in a row. There was a bearish 3 gap ups reversal pattern had formed, and so today that pattern was confirmed, and so the red candle confirmed the pattern. There was a close below EMAs 4 and 8. So the next level to hold is going to be this EMA 13 at 34.57. If that breaks, you could see a drop down here to the middle Bollinger Band at 32.93. In order to get, push in higher again and get this uptrend going again really strong, has to get back above EMA 4 at 36. Has to be trading back above 36. If you look here at HMLSF, this is Horizon's Life Science Index ETF, and you can see here it's pulling back, had formed the bullish or the bearish doji star reversal pattern. When a stock is in an uptrend and then it has a gap up open and a doji candlestick forms, many times that signals a temporary top. That was the pattern here, and so today that candlestick pattern was confirmed. There was a close below EMAs 4, 8, and 13. That's the pink, lime, and orange lines, and so that's putting the middle Bollinger Band at 1588 on deck, and so that's going to be the key level to hold. It needs to bounce off of that level to keep this uptrend going. The uptrend started back here on the 15th with the close above this dotted purple line. As you can see here, that level had broke back here on the 26th of June, and this downtrend had started. So the new uptrend started here in August, and so in order to keep this uptrend going, it has to hold that level. If that level were to break, you could see a pullback down to these moving averages to test support. Okay, take a look here at Tilray. Okay, so Tilray has been on an incredible run, closed up 14% today. I mean, this has just been incredible, epic proportions. You're looking at 119 during the regular session, 119.76. It goes without saying that RSI and Fasto are at extremely frothy levels. You can see there was a bearish crossover here on Fasto. Yeah, and so before I get to the after-hours stuff, you can see here Tilray call options were up huge today. Check out the September 14th expiration 130 strike, up 4,000% today. So that's amazing. Yeah, so congrats to people that were trading Tilray options. So good job. Yeah, this has been an incredible run. Epic proportions. So right now at 110.25 after hours. So what that's doing, I don't know if there's a gap here. There might be a very tiny space here, but the bottom line is it looks like it's headed for EMA4 at 104.25. That's going to be the big level. It has to stay above that 104 level. If it breaks below 104, you could see it drop down to 92. If you look down here, there are some unfilled gaps. There's a gap between these two candles, so down here at 65. If there was a drop down to this middle Bollinger Band at 63.91, that would fill that first gap if there's not a micro gap right there. And then there's another gap down here to 55, and then a gap down here to 45. This gap filled right here, but there is another gap way down here just above $30. So there's a lot of space on the chart. So it's all about holding EMA4 to keep that uptrend going. Okay, so bearish doji star reversal pattern. Okay, so it did form on this candlestick right here. It was in an uptrend. There was a gap up open, a doji formed, but it pushed higher today. I mean, in my opinion, that this pattern is still in play. If it drops below this closing price here, that's going to be confirming that pattern. If there's a red candle, it closed below that level, so keep that in mind. If you look here at Tilray on the 15-minute chart, you can see here this is where the load above EMA4 would have really paid off. You could have just kept riding. I mean, you could have just loaded this anywhere during the initial trading on the big boards there, and it would have just been a great trade. But the bottom line is it broke out here on the 11th. You can see it was in this channel, and then that close above high close resistance signal more upside potential. So now it's got to hold that 104 level. It could come down and test that 92. You want to see it stay above that 90 level, that 90-92 level. If not, it could come down here, test 80, and like I said, then it could possibly come down and test that middle Bollinger Band. So we'll just have to see how the marijuana sector stocks respond. Okay, so as long as EMA4 supports holding, there's still upside potential. The signal is to keep riding. If that level is holding, it signals more upside potential. Once it breaks and turns into resistance, that's where you get a pullback. If you look here at CGC, you can see here it formed bearish doji star reversal pattern here on the 10th. That pattern was confirmed on the 11th. And then right here on the 12th, you can barely see it, but it closed just below EMA4. So EMA4 support was breaking, and then today there was the big drop below that level. And so the close below EMA's 4 and 8 for CGC is signaling downside risk. It needs to get back above those levels, has to turn that 48 to 49 level back into support. Otherwise, it'll signal that it could possibly have a correction, have a little bit of a pullback. And so right now, it's hitting that key support level. It's all about this middle Bollinger Band. It has to hold 44.94. Okay, it closed below that level today. That's a red flag. It just needs to get back above. Similar to over here. Okay, so you had a break above the dotted purple line, and then it dropped below, and it got back above. What you don't want to see happen is what happened over here back in June, where it got below the middle Bollinger Band, and then it turned into resistance and it pulled back. And so it's going to be very, very important, basically, that it gets above 45 and stays above 45. Trading below 45 is going to signal downside risk. Now, if you look at CGC here on this daily chart, you can see it closed below EMA's 4, 8, and 13. You've got EMA 4 and 8 pinched right here with EMA4 just starting that bearish crossover. That's an early reversal signal. That's a signal the chart's breaking down, the bears are taking over. So it's really important, like I said, that it bounces here. Now, where could this be headed? You're going to get some support here on the high closes here, on the closing prices. But one thing to keep an eye on is down here at this 50-day simple moving average. There is an unfilled gap down here at 34, and so there's a possibility, if it did have a bigger correction, that would be a downward target. There is another gap way down here to the 200-day simple moving average down at 26. I'm not saying that either one of those gaps are going to fill, but if it does break below that middle Bollinger Band and it turns into resistance, that would be the downside risk, is heading down to that 50-day simple moving average. So it's going to be really important. It gets above 45. If you look at CGC here on the weekly chart, you can see it dropped below 70 on RSI, and so that's a red flag. Okay, so this is where it dropped below 70 before. It needs to get back above that level. Now this is a weekly chart, and so it could still have a bullish move tomorrow and push back above 70. But if it closes below and trades below 70, that's going to signal the chart is starting to cool down. Okay, if you look down here, this is the last time it broke below 70 after being above, and then a big red candle followed. And what did it do? It came down to the middle Bollinger Band. Okay, so that's right here when this move happened, and so that is the downside risk here. Is that if it does get below EMA 4 here on 44.33, if you get a weekly close below that level, if it breaks below, it could come down there and test that middle Bollinger Band. You want to see support hold. That is the downside risk, is a pullback to that 31.32 level. Okay, as long as the middle Bollinger Band's holding, this is a good long-term hold for more upside potential. It's just the pullback gives you a chance to make a trade. Notice that there is a big red volume bar this week. So after all these green volume bars, you got a big red one starting this week. And so yeah, the next support level would be this EMA 8 at basically at $40. Okay, let's look at CGC on the 15-minute chart. And so yeah, it sounds pretty gloom and doom here, but let's see if maybe it could get a technical bounce off of this next support zone. It's hitting this 43 level. That's from back here on August 30th. That would be the next key level to bounce off of. Right now it's free falling. It's below all the moving averages on the 15-minute chart, and it's right in EMA 4 resistance lower. You're going to get a technical bounce once it starts turning EMA 4 into support and starts forming candles above that level. Currently that's at 44.64. As long as candles are forming below, the signal is to continue being short. Continue writing puts, staying, but the key is that you have to watch out for this middle Bollinger Band level, because that is the technical bounce level. If they fail to bounce off the middle Bollinger Band on the daily chart, it's going to be a major red flag, because new downtrends could begin. And that's the setup here for Chronos Group, ticker symbol CRON. So if you look here, it's cooling down. It has to stay above 50 on RSI. If it drops below 50, that's going to be a major red flag that the chart's cooling down, so you want to see it stay above that level. You already have Fasto cooling down. It needs to, it's heading down towards that 20 level. So there's been a pullback. It did have a bearish reversal confirmation a little while ago, and then it pulled back, and then now it's dropped all the way down to that middle Bollinger Band. So it's testing that key level. That's currently at 10.13. It's at 10.11 right now, and so it needs to hold this level, major support level. It did come down. I'll show you in the next chart, but it filled this gap between these two candles here, and so there was a gap fill. So we'll see if that's a catalyst for a technical bounce off of 10. It's going to be a big red flag if 10 turns into resistance. So that's a really easy way to keep track of Chronos in the short term here. It's got to just hold on to 10, stay above 10. You can keep this uptrend going. You filled the gap many times. A downward gap fill is a catalyst for a technical bounce, and so we'll see. It's set up for it. It's just the after hours news was a killer, and so all the Canadian big dogs were down in after hours trading, so that could put that middle Bollinger Band into a resistance level. If you look here at Chronos Group, this is the chart we've been working on. You can see here, you want to see it stay above 50 on RSI. It dropped below 50 here on Fasto. So basically, it came down. You could see the gap between these two candles. That gap did fill today. It's right there at that middle Bollinger Band. This is the big level to hold. If it breaks, you could see it come down here to $9 and test the top of the previous gap support. This gap did fill. Notice how it came down here, filled this gap, and that was the catalyst for the bounce. That's the setup here. It's set up for another bounce, but it's just all a matter of whether or not it can get back above 10. Okay, let's look at Chronos on the 15-minute chart. You can see it's in a downtrend. Okay, it's hitting this key support level from August 30th. You can see that was resistance before it broke out. It's hitting it. That's that $10 level. If it broke below, then you've got this 960, 970 level. That's going to be big support. If it breaks, you're looking at a drop down to $8.80 to $9. Down here at this 880, 890 level was the big support level back on August 30th. Okay, so same scenario. It has to get back above the moving averages there on the 15-minute chart to get a reversal going. Okay, let's look at APHQF here. This is Aphria. It pulled back as well, down 17%. Really cooled down. RSI is now below 70, Fasto below 80. Bear cross here on 80x, and so it's pulling back. It's heading towards that middle Bollinger Band level. Once again, it's below EMAs 4, 8, and 13. Notice how all these candles here were above the pink line. Okay, they started right here on the 15th. They all started on the 15th, not all of them, but most of these marijuana sector stocks started running on the 15th. And our strategy was to keep riding as long as that EMA 4 support level was holding. Well, today was the break support day. So today was, if you didn't lock in gains before, today was the day to lock them in, giving yourself a chance to reload at lower levels. And so right now the target is the middle Bollinger Band at 1222. That level needs to hold. That if it breaks, then this uptrend could break down, and you could see a drop down to the 200-day simple moving average at 1061. Keep in mind that the middle Bollinger Band is always a good level for a technical bounce. Okay, take a look at Aurora Cannabis, ticker symbol ACBFF. It didn't break that 200-day simple moving average. You know, that was why you know, the strategy really the best strategy I thought was just to wait for a break above the 200-day simple moving average. If it broke above $7, then and was able to close above the 200 like it did here, but then stay above, that would be your signal to buy. That would be the signal that was ready to go. To me, it was kind of like in between this middle Bollinger Band and the 100-day simple moving average where it's at right now, and the 200-day simple moving average. It's like it's no man's land. We're not really sure which way it's going to go in this zone right here, and so it's best when a stock is in a sideways channel, if you want to just try to time it, to wait for that break above resistance, and that's your bull signal. That's your signal. Okay, it's finally ready to go. That has not happened yet. Now it's pulling back, and then tomorrow it's likely going to be under pressure. If it drops below that 100-day simple moving average at 626, you're going to have that 50-day simple moving average at 593 on deck. That's going to be the big level to hold. You know, below that is the 300-day simple moving average at 554, and then you know, I hate it, but these gaps, man, the market makers form gaps for a reason, and they become targets on pullbacks. And so for ACBFF, write this down, the target is $5. And so if it came down, broke below these moving averages, and you know, you might want to wait to see if it could fill the gap down there at $5. Like I said before, a downward gap fill is a catalyst for a technical bounce. You never know if it's going to get that low or not, but it's always nice to have targets. Okay, let's look at OGRMF here. So yeah, this is another one of those bearish reversal confirmation patterns. It formed bearish doji star. Once again, you know, a doji is not your friend, so keep that in mind during an uptrend. It's your friend during a downtrend. It forms a bounce pattern, but during an uptrend, you know, it signals danger. And so once again, you have you know, a stock pushing higher with multiple gap up opens, and then you have the it's the gap up open followed by the doji or a hammer candlestick, and that sets up the bearish reversal pattern. You know, this is the classic bearish doji star. It is even a stronger pattern if this doji did form above that upper Bollinger Band. That makes it an even stronger pattern. It formed right at that level. Regardless, the pattern was confirmed today. It closed below EMAs 4 and 8. Now it's at EMA 13 at 520. If that level holds, that would be a good level to bounce off of. It bounced off that level on the 28th when it was tested. If it broke below, that would be a bearish change in trend since it had been holding, and then you're going to be looking at a drop down to that middle Bollinger Band at 482. It has to hold that level to keep the uptrend going. Okay, let's look at TGODF. Okay, this is the green organic Dutchman. So yeah, this is, you know, these are going to be, they're the organic farmers, and so they're trying to do it right, but they're getting punished right now. If you look here, so whenever you get RSI above 70 and then it drops below, that's a sell signal. So right here, if you look on the chart, that's right here on the chart, and then you can see what happened. It dropped, and then look how that was the high. You know, that was the high right there where 70 dropped. I mean, the high was before, but that was your sell signal if you didn't get out at the very high. And so it's a very, very simple thing to keep an eye on. But once you get above 70 on RSI in the daily chart, it has to stay above. If it drops back below, that's a signal the chart's breaking down, and then there could be it could be a multi-day pullback. and so that's why you want to use that as like your stop loss level. When you see it drop below, that's your signal. Okay, the chart's breaking down. You use the relative strength index in conjunction with the other indicators. You don't want to make your trading decisions alone, but when you see that along with the red candle, with Fasto, with the crossover, this is another bearish crossover. They're all signs that are leading up to, okay, yeah, the stock is pulling back. If all that wasn't enough, when you get down here and you look at the candlestick pattern, you can see here that it made a high in June, and then it came down and it did what we call filled the jar. It filled this jar back to that prior resistance level, and so when a jar is filled, it's a climax event. Okay, and so what happens is it has to break out above the previous high, and then turn that level into support to keep heading higher. If it fails to do that and drops below, that's a sell signal. And so what happens is this high here becomes the stop loss level. And so dropping below $6, that was your lock in gain signal if you hadn't done it already. This is for the traders. Okay, this is for trading. Okay, if you're a long-term investor, hodl. For the crypto people, that whole thing, then you're going to have a different strategy. But this is for the traders. This is where you get a chance to trade. And so right now the jar is filled. It filled it all the way back up to this level where the previous high. And so it's going to have to break above the 650 level. If it can get above 650, then that's going to be a signal that's going to keep pushing higher. It's in a strong uptrend right now. It just had a pullback. It could easily break back above resistance here and head higher. Now, if it fails to and it turns into resistance $6, that's where it could consolidate. If it does consolidate, as long as it holds the middle Bollinger Band and the 50-day simple moving average down here between 445 and 466, this uptrend should continue. If it dropped below, that would signal more consolidation. Right now, though, you really it's just best if it can break above $6. If it fails to do that, wait for that pullback, and then try to look for reload levels at down below. And so yeah, it's all about breaking the top of the jar right now. Okay, let's look at GTBIF. This is Green Thumb Industries, and so it has a nice uptrend going, very strong uptrend. Okay, notice that RSI is at 73, so it needs to stay above that level. If you look back here, when it was above 70, and then it dropped below. Right here, that was when it was above 70, and then it dropped below, and then look where it went, from $11 all the way down to $6. And so this was an easy signal. Okay, so just keep an eye out, watch RSI. If it drops below 70, that's going to be a major red flag. There's already red flags in the chart right now. You have RSI breaking down, you got the pullback on plus DI, and then today there was a close below EMA4. If you're doing the EMA4 strategy and you're riding EMA4 support higher, when there's a close below, that's your signal that there's possible consolidation coming. That's where you can possibly get a reload lower. If it drops below EMA8 at 1506, you have EMA13 here at 1386 on deck. Now there was a previous high close back here on the first trading day in July, and so that would be a nice support level to hold and bounce off of. It'd be a red flag. If it dropped below, the main thing is that it holds that middle Bollinger Band. It keeps that 20-day simple moving average intact, currently at 1155. If that level were to break, then the downside risk is there is a gap down here. And this gap could potentially fill if these support levels failed to hold. Okay, it's always a red flag when you have a volume spike on a red day during an uptrend. Notice how you have all the green volume bars and then a larger red one today. Many times that's a signal that people have taken profits at the top, and it could possibly pull back. Okay, so just keep that in mind. You follow the volume bars into the trade at the bottom. You look for big volume spikes at the bottom to signal people have loaded, and then you look for big volume spikes at the top to signal that people have taken profits. Okay, look at NXTTF here, closed down 12% today. So notice we've got the RSI now below 70, Fasto below 80. You had the crossover on ADX. Also keep an eye on plus or minus DI. When it's hooking up like that, that's a signal the bulls or bears are heating up. All right, so this had been riding EMA4, that pink line, and then today it closed below. All right, it did get a bounce. People were loading off at EMA13. You can see the lower wick. If it holds that 208 level, that would be bullish. All right, it's still a very strong chart. All these charts are still strong. You know, stocks don't go straight up. They pull back, they test support. As long as they hold the middle Bollinger Band and bounce off that level, the uptrends continue. It's when that level breaks is when the downtrends can begin. Okay, to head higher, it has to break above the high close, and that's the same for all these stocks. They have to keep making new high closes, and so what you want to look for is that recent high close, which is right up here above 270. If it can close above the closing price on the 11th, that's going to be your signal that it wants to keep pushing higher. If you look here at GLNNF, this is, you know, it's got some exposure to the marijuana sector, and it also has exposure to the cryptocurrency sector. It's up 38% today. Keep an eye on it. It's hitting 50 on RSI. It's above 50 on Fasto. You have a bullish crossover here on ADX. It's back at the 50-day simple moving average. That's at 30 cents here. Okay, so it has a hard time breaking this level. As you can see, it's hit the level and stalled out. If it breaks above 30, that would be bullish for this stock, especially if it closed above and turned that level into support. If that happened, then the target would be the 100-day simple moving average at 37. You notice that's lined up with the upper Bollinger Band and with the recent high close there. So that would be a nice target on a break above 30. It would have to close above those levels and turn them into support to keep them going. You know, it makes it interesting. It did have the volume spike today. It was the largest volume day since back in June. Okay, so yeah, keep an eye on GLNNF. All right, thanks for viewing this video. Really appreciate it. Come check out our chat. Send me a message when you get there. All right, to Osprey. Thank you.